Welcome to Drill Down Earnings. We have the latest quarterly results from Palo Alto Networks. Interesting quarter. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. When we look at this number, Wall Street likes a beat or a miss, and this was a beat, but I don't think that's really relevant. 2.1 billion, I guess kind of right in line with estimates. Profits a little bit better. But what's really important to me here is the business story behind the stock moving and what really happened here. So revenue growth has slowed, yeah, but it's kind of ticking up a little bit, 14% on a year-over-year basis. So it's not the gangbusters 25% growth we saw a year and a half ago, but it's turned it back in the right direction after kind of a tough time for this company. Remember 4 quarters ago, they took a really big hit, or 3 quarters ago, I don't know, the January quarter. They took a big hit in profits. They told us that it was going to be kind of rough sledding for the rest of this year. And we saw that with their margins, but their margins are now recovering. Their operating margins, or EBIT margin, if you will, now at 13%. This is the most profitable the company has been in years. And also the slowing down of all the billings that they had. So their RPOs, right, the remaining performance obligations, that's unrecognized, deferred revenues, unrecognized revenues, in addition to the contracts that they've signed. Well, that has stalled, again, not growing at the 40% rates of 2 years ago. It's ticked up in the right direction, up to 21% this quarter. So we're going to talk about how the market reacted to this, and we're going to talk about kind of what's going on the product side, because I got to spend a bunch of time with Palo Alto and their CEO, Nikesh Arora, last week. But let's look at the stock reaction. The stock sold off 5%. Maybe the market thought these numbers weren't good enough. Maybe the market didn't really understand what's happening here. Or maybe the market looked at the 49% gain in the last year and said, yeah, maybe time to take profits if this hasn't happened yet. But what's happening from a product side is really interesting here. So in the world of cybersecurity, there are lots of little solutions that fix little, and of course, if you have the problem, a big problem. But Palo Alto Networks is taking the idea that they can really build a platform. Yeah, they used to sell firewalls a few years back, and that was their main business. But they really think that they can sell a master dashboard to the SOCs, to the security operations centers at every company, so that the securities teams can understand everything that's happening from a threat perspective from cybersecurity and use Palo Alto Networks software to respond to that and to control all the tools that they have. That platformization is a big bet that CEO Nikesh Arora has taken with Palo Alto Networks to move beyond firewalls to being the platform for all kinds of security solutions. And there are little signs here that it's working. They say they've got 1,100 companies using their platformed tools, or platformization. I guess that's the word they use. I guess it's a word I'll have to learn to say. But they think they're by fiscal year 2030, which is a way out, they're going to be somewhere near 3,000 platformizations. And they think there's a huge opportunity to do this and maybe even grow more customers. So one of the interesting things I took away from my meetings with them last year, maybe the most interesting thing, was that CEO Nikesh Arora, when I asked him how he values new customers, he's not looking at how much customers spend right now and figuring out, multiply that over time. He says the ending average return or average ARR, the average revenues for recurring revenues for a customer, is the most important number, and he's going to spend what it takes to get there, which suggests that profitability is not, right now for Palo Alto Networks, is not the goal, but being the platform that works best. As he said to me, nobody ever quits, dumps a CRM or a database when it's working. Nobody dumps a platform for their security if it's working. The goal is to get in there, get those customers, and then keep them. And he thinks that one of the keys to that are the hackers who are using AI to be better at hacking.
Separate signal and noise. The biggest signal is AI in the next 12 to 48 months. And AI is already having significant impact both on the attack side. Attacks are getting faster and faster and quicker. AI is possibly being used to evaluate what are the more vulnerable parts of your infrastructure, so we can go after that. So I think from a cyber incident perspective, unfortunately, it's not going to slow down, right? And that's the biggest driver of improved security posture and improved higher spend from CIOs. I think you're right. There is a consolidation. Let me spend less money for security. And there we are discovering it's a more top-down motion than it is a bottom-up motion. And as you're aware, we're expending a lot of effort towards interacting with CIOs and C-level executives. And actually, we're spending a lot more time with our GSI partners trying to address that issue because they're typically involved in the transformation stage where they say, let's take all of this stuff, put it together, and replace it. So we're seeing early success. As I said, we should have done that sooner because when you sit across the CIO and say, look, you have 9 different products, we could bundle it together, take it down, have one management pane, and you'll save a lot of cost because, and they understand, because we're not ingesting data 9 times across 9 products, we're ingesting it once, analyzing it 9 times, and giving them the outcomes they want. So I think the trend is in our favor.
So take it from Nikesh Arora. The trend is the friend of Palo Alto Networks. But what's this all mean? What's the big takeaway? What do you want to remember about this company and this quarter's results? Well, Palo Alto Networks' third quarter results show us, $2.1 billion in revenues and a return to growth at 14% revenue growth, a return to an increase in the growth percentage of revenue. But I think the one number that tells us a whole lot is both revenue growth and remaining performance obligations at 21% ticked up this quarter. Not much of an increase, but both increasing this quarter suggests that there's a lot new business that Palo Alto Networks is starting to win, which is a good sign for Palo Alto. All right, thanks for checking out Drill Down Earnings. Subscribe. We want to be able to bring you more of this and have you not miss it. So subscribe to us on whatever platform you're watching. Thanks for checking us out.